All right, welcome back, traders and investors. Again, Kyle Bazzi here, filling in for Joel Elconin on the Friday Honey Badger Market, August 22nd. With me is good friend and the retail analyst, Brian Sozzi. Go to find him on Twitter at Brian Sozzi. What's going on, Brian?
Hey, what's happening? Happy Friday.
Happy Friday, happy earnings season, happy the retailers can't get knocked down season. Tell me what you're looking at, what's on the radar.
Well, surprisingly, within the retail sector, we've seen the stocks not get completely slaughtered if they put up a decent quarter. And I think what has happened, the retail sector has largely underperformed the major industries this year, especially consumer discretionary. But over the past 6 weeks, we've seen retail sales come back as the back-to-school season picked up, specifically amongst the specialty retailers, let's say like a Gap, but also, interestingly, like a Dollar Tree. You know, Dollar Tree's same-store sales increased pretty strong as the second quarter went along. So I think you're starting to see now the market position for a potential better-than-expected back-to-school and holiday season of this year.
Interesting. We went over some of the earnings this week. You know, obviously looking at Foot Locker and everything. What do you think about Target with the run it's had right now?
Well, real quick, you mentioned Foot Locker too, and I was going over this quarter, and I think what you saw from Foot Locker, you saw it from Under Armour, and you saw it from Nike a couple weeks ago, and even within the JCPenney and Macy's results, athletic wear continues to be really, really hot. Tops, bottoms, sneakers. They are the uniforms of choice amongst kids, and increasingly amongst the kids' parents. So I think you'll see a lot of full-price opportunities in the department stores. And a great example, I walked the Macy's flagship Herald Square store 2 weeks ago with the Macy's team, and they're now starting to roll out more shops from Lids, more shops from Under Armour and Nike, showing the best-in-class presentation to feed into the strong athletic wear trend. And if I was Dick's Sporting Goods, I would be concerned by what Macy's is doing in its new stores with these athletic shops. But on Target, you got on the earnings call with them. They sounded very optimistic, but the bottom line is this. Target has not earned the respect from investors. You should not believe, I think, at this point, the hype that they were spewing on their earnings call. I did like what the new CEO, Brian Cornell, had to say. He seemed humbled, and from what I have known from him from the past couple of years, he is the right guy for this job. But Target needs to show me something in the U.S. They've had 9 straight quarters of traffic declines. I just got some more pictures from my contact in Canada. I think they still have massive problems there. I need to see better results from Target before I can lift my sell rating.
Target, yeah. The one thing I love about following Brian on Twitter, which I just dropped that link in the chat, is the what do you want to call it? The in-store surveillance, the in-store research, where you're getting pictures, you're going in the back rooms. I mean, that's what you're known for. And Target is definitely one of the ones that I've been following you on. 9 straight quarters of traffic decline, huh?
Yeah, and you can see it in the stores. And you know what I do? I go into every store with a clear mission to be even proven wrong or be proven right. And with Target, when they tell me that that they're optimistic on back to school, they're optimistic on the holiday season, they have new shops going in within apparel, great. Well, let me see it in the stores. Let me see it in the 50 stores that I walk. Let me see it from the contacts sending me pictures. And I don't see it. So there's a disconnect between what Target management is telling people and what is happening in the stores. And what's happening in the stores? Oodles of 30% off clearance signs, a badly merchandised apparel section, and a back-to-school section, which, yes, you're always going to get that traffic as the season wears along, but I think they bought too many goods for back-to-school. So I think investors still need to understand that Target has not reinvented itself, and because of that, I think the margin risk is a little bit greater than what people thought coming off that earnings call.
Let's talk about our neighborhood restaurant and IHOP as well. So Applebees and IHOP, I just saw an article coming out from you on thestreet.com where you are a regular contributor over there. Dine Equity, DIN. You're talking about transforming IHOP and Applebees. What are you seeing there?
Well, appreciate the mention on it. Yes, it just went live. I sat down exclusively with CEO Julia Stewart a day and a half ago, and 2 big takeaways with them. First, within the next, they didn't give me a timeline, but it's reaching beta phase, which is the next level after alpha phase, new IHOP redesign. And from what I learned from Stewart, the IHOP design will be very much rooted in the company's heritage in terms of look, but also, I think, focused on the millennials. And then secondarily, it will infuse more technology. Specifically, they're about to launch a mobile app. Secondarily, they are coming out with a new waffle program at IHOP. And I know that might sound silly at first, but waffles and breakfast are the biggest category for IHOP. They call it one of their 9 key ingredients. So that could be another traffic driver as we get into the quarter. The bigger picture here, if you go back over the sales results for IHOP and Applebee's over the past 4 quarters, they have been outperforming most of their competitors. And if you go back over the profit margins over that time period, they've been accelerating. So the company has greatly streamlined its menu. It's pulled off probably about half, well, maybe about 25%, let's say, of the menu at IHOP to make it more streamlined. At Applebee's, they're in the process of rolling out new tablet technology to improve the guest experience. For example, you could sit at an Applebee's now with a tablet, order drinks, appetizers, and food, and play games. It's keeping people in the store, in the restaurant, and having them spend more. The next evolution for Applebee's, what I think is what they call shareables and cravables. So more shareable plates, more items to offer the consumer that they probably might be getting at some other restaurant. So I think the story there is underappreciated by the market right now.
I like this story that you were kind of just telling there, too, with the upcoming school season, and then obviously that feeds right into the holiday season. Retails are always in the news, always on everyone's radars. Are you optimistic then for the rest of the year?
I'm not as optimistic as I might sound this call. I tend to be very realistic on retailers. I need to see the things in the store that match up to what the market may be seeing. And I still see massive profit margin pressure within specialty retailers. You know, I look at Forever 21, H&M, Zara. Not only are these companies opening up massive new stores across the country, and even Uniqlo, now they've started to go back and remodel their locations. And I am concerned about what they're doing and how they ultimately impact Abercrombie & Fitch, which ironically has received 4 upgrades into the earnings report next week, American Eagle, and Aeropostale. Aeropostale just reported results I think it was yesterday, and they're very challenged. Where I might be a little more optimistic is in the department store sector, believe it or not. JCPenney stock is up 3% this week. It got hit on earnings last week, but recovered those gains. I think it's very telling for them. They've been putting a lot more private label goods. Right now I'm looking at their third quarter gross margin guidance, which freaked out the street last week when they reported. Might be a little conservative. There is momentum in JCPenney and Macy's. And I know Macy's missed by 6 cents last week. But what they're doing in buy online and ship from store is really impacting their sales. And I believe over the next 6 to 12 months, you will see Macy's roll out a pretty comprehensive same-day delivery program that will greatly improve their results.
So bullish on department stores and a little less on, you said what, the Aeropostales, the American Eagles, and all them?
Correct. Basically just because what their competitors are doing. And you're going to see more store closures from Abercrombie, Aeropostale, and American Eagle over the next year and a half. And they still haven't gotten their assortments right. The team is absolutely obsessed with the low prices and the fashionable items that they can buy from Forever 21, H&M, and Uniqlo.
Oh, right on. Now, Brian, where can I dropped your Twitter in the chat. Is that where people can follow you? I got some private messages coming in saying where can we get more of Sozzi?
Well, yeah, Twitter. You can reach out to my company's website. It's www.dallascapitaladvisors.com. You know, we're always putting out stuff, and I do have a lot more interviews for Street.com coming over the next month and a half. So you're on my email chain. You can send those things along. So definitely be super helpful.
Yeah, you are always getting a hold of the CEOs, always getting the hard to reach type interviews, which is great, and obviously getting access that a lot of people, they just don't get, which is awesome. So, the retail sector obviously has been doing so well. What about home builders? We saw Home Depot and Lowe's report this week. Home Depot beating, Lowe's not beating, but still rallying in this bull market that seems to be relentless. Dennis and Joel call it the honey badger market. What are you seeing in the sector there?
I like their name. You know, the interesting thing was, I always tell investors, you always have to be connecting the dots and looking for signs in one company's earnings report that might set up for another company's earnings report. What I mean? Valspar, they reported, I think, a week and a half ago, and they noted very, very strong paint sale. A lot stronger than I would have thought. So to me, boom, I'm immediately thinking that Home Depot is going to report better than expected results and probably much better than what Lowe's put on the table, because Home Depot is now outperforming Lowe's in terms of same-store sales, average ticket, traffic, you name it. They've been trouncing them over the past year and a half. But I very much like what Home Depot had to say. I have a call with them on Monday to flesh out a little more details on the quarter, but one thing that stood out to me is that they saw a growth across the chain, and then secondarily, across departments, and secondarily within their online business. Online sales are up 38%.
Wow.
Granted, it's only the 4% of their total sales, but still, you're now starting to see the first signs that online is positively impacting the Home Depot shopping experience, and I think that could be very powerful as you look out 3 to 5 years, which is how you have to be thinking about a Home Depot and Lowe's in terms of investment. They're not going to open up a lot of stores. So to invest in either one of them, you have to see which one is doing the best job in terms of online, re-merchandising their departments, and bringing cool new things such as 3D printers. And my opinion is that it's going to be Home Depot and Lowe's over the next 3 to 5. It's going to be Home Depot over Lowe's over the next 3 to 5 years, just in terms of share price performance.
I just retweeted the picture that you sent out on Twitter when Lowe's came out with their earnings, and it says, after a weak quarter from Lowe's this morning, a memo, and it's a picture of the Home Depot join a winning team.
Yeah, I think that, I was just telling you, you're in the stores, there's all these little slogans, little things, and when the company reports earnings, like, you know what? That makes sense. Let me tweet that out.
I don't know if you've seen this, and this is just my personal experience. So we had these huge floods in Detroit over the last couple of weeks, and my entire basement flooded, and my first choice has always been Home Depot, but I go there because of the staff. Like, they are overly helpful when I'm in there, always reaching out. Like, I feel like there's someone in every aisle there to kind of help me to find what I need. I don't know if you've heard or seen any of that when you went to go visit the stores.
No, that's a great observation. Well, first of all, it's always funny because Home Depot, for years, has been known for giving subpar customer service in terms of what people actually had to say in the store, and then you couldn't find them. And Lowe's, on the other hand, was always viewed as friendly in terms of customer service, and that you could always find somebody. But over the past year, Home Depot has invested very aggressively in the type of people they bring into the store. Lots of former tradesmen, lots of people with great experience that can help seal the deal when you're in the store. And they're now flexing hours to when the stores are very busy. So, for example, if you go into Home Depot, let's say at 12 o'clock on a Wednesday, you will see more workers helping to support a lot of the pro people, a lot of the customers or the workers on job sites. So a lot more workers in the store for then, and then also on the weekend when a lot of John Doe consumers just come in and buy remodeling projects. So the customer service is definitely improved there, and I think you've definitely seen it in the same store sales.
Yeah, that's a great point. Is when I go to Home Depot too, that's not some 19-year-old kid that's there for the summer job. It's people that they have knowledge on what they're talking about, which is great.
Definitely. It helps. It just helps seal the deal and improve. And keep in mind this: that is a type of experience that Amazon cannot order. And Home Depot has been making more mention of Amazon. They're always watching them. But the fact is, it only is a limitation to what Amazon can do because of these experienced human beings inside of physical retail stores such as Home Depot.
All right, Brian, we got to wrap it up here, but give me some last thoughts here for the retail sector. As you said, next week, Tuesday or Wednesday, it's time to hit the beach now that earnings are slowing down. Any last thoughts on retail?
Well, my last thought early in the week was Sears. Bad results. We got those haul results from Sears. I think Sears is in a structural decay, and they have big financial problems starting in 2017. Best Buy results on Tuesday. It's everything that I've seen. I think you could get a meh-type quarter from Best Buy, maybe not as good as the market expects. The CEO gave an interview on Recode about a month ago. Cautious comments, but also we're hearing that electronic sales have been very weak, specifically within wireless, because Apple has now released its phone. So I'd watch out for Best Buy.
Yeah, we had Kara Swisher on the line for an interview earlier. I think it was Monday this week. So definitely great stuff going on over there. So, all right, Brian. Hey, thanks a lot, man. Appreciate everything you do. Have a great weekend and slowing down next week. I'll hopefully see you on the beach.
Yeah, thanks so much, guys. Have a great weekend.
All right, brother.